Hey everyone, welcome back to Corporate Decoder, the place where we dissect the juicy financial secrets of the corporate world. Today we are diving deep into Genie Energy's Q3 2025 report, and let me tell you, there is more buzz than a solar panel convention in August. Alright, let's get right to the heart of the matter with Genie Energy's latest 10Q filing. This report gives us a snapshot of their financial health as of the 30th of September 2025. It is like looking under the hood of a car to see how the engine is running, and we need to see if Genie Energy is firing on all cylinders. Let's start with the balance sheet. Imagine this as the company's financial snapshot at a specific moment. On the asset side, meaning what the company owns, we see cash and cash equivalents at over $109 million as of the 30th of September 2025, which is up from about $104 million at the end of last year. That is a good sign, showing they have readily available cash. Trade accounts receivable, which is money owed to them by customers, is around $59 million. This is slightly down from nearly $62 million at the end of last year, which could mean they are collecting payments a bit faster or perhaps have fewer outstanding sales. Inventory is up significantly from about $12 million to $21 million, mainly driven by a big surge in renewable energy credits. It's important to watch inventory levels as too much can tie up cash. Total assets are around $394 million, up from nearly $371 million. Now, let's look at the other side of the balance sheet, liabilities and equity. Liabilities are what the company owes. Total liabilities are about $205 million, up from roughly $192 million. This includes trade accounts payable and accrued expenses, which are normal business costs that need to be paid. The company has about $6.7 billion in non-current debt, which is debt that is due more than a year from now, and a smaller amount of current debt. This is where we see what belongs to the owners. Genie Energy Limited stockholders' equity is about $198 million, up from about $190 million. This growth in equity is a positive indicator, suggesting the company is building value for its shareholders. However, there is a slight negative number for non-controlling interests, which represents the portion of ownership in subsidiaries that does not belong to Genie Energy. This typically means that some of their subsidiaries have outside owners for a portion of their shares. Now let's talk about how the company is actually performing its revenues and profits. This is where the real action is. Total revenues for the third quarter of 2025 were about $138 million, a nice leap from around $112 million in the same quarter last year. For the first 9 months of the year, revenues hit over $380 million, up from about $322 million last year. That is a solid revenue growth story. But revenues are only half the story. We also need to look at the cost of generating that revenue. For the third quarter, the cost of revenues jumped from about $74 million to $108 million. This jump is larger than the revenue increase, leading to a lower gross profit. For the 9-month period, costs also increased significantly, meaning the cost of acquiring and supplying energy is going up. This directly impacted gross profit, which is revenue minus cost of revenues. For the third quarter, gross profit dropped from nearly $38 million to about $30 million. For the 9-month period, gross profit also saw a dip from over $105 million to about $91 million. This is a critical trend. It suggests that while Genie Energy is selling more, it is costing them more to do so, cutting into their profit margins. Essentially, the cost of the energy they are selling is rising faster than they can pass that cost onto their customers or manage their own expenses. Operating expenses, particularly selling, general and administrative costs, also played a role. These costs have decreased slightly overall, which is good, but the increase in the cost of revenues is the more dominant factor affecting profitability. As a result, the income from operations took a hit. For the third quarter, it fell from about $11.7 million to $6.9 million. For the 9-month period, it dropped from over $32 million to about $21.8 million. This shows that despite selling more, the company is bringing home less from its core operations. Looking at the bottom line, net income attributable to Genie Energy Limited common stockholders for the third quarter was about $6.7 million, down from over $10 million in the prior year's quarter. For the 9 months, net income fell from about $27.9 million to around $20.2 million. Earnings per share also followed this downward trend, which is a direct consequence of those rising energy costs and shrinking gross profit margins. It is worth noting the huge increase in electricity revenues, around 25.7% for the quarter. They attribute this to more customers and higher prices. However, the cost of that electricity also jumped by a whopping 49.7%. This mismatch between rising costs and revenue is the core story here. For natural gas, Revenues are up, but again, costs are up even more, especially in the third quarter with a 137.3% increase in cost of revenues, leading to a significant drop in gross profit. When we see costs rising this much faster than revenues, it signals potential pricing pressure or a challenging energy market where they cannot fully pass on increased expenses. The Genie renewables segment, which includes solar projects, is showing some mixed results. Revenues are down slightly for the quarter, and for the 9 months, they're focusing more on utility scale projects. Now, moving away from smaller, lower margin commercial ones. While this might be a good long-term strategy, it is impacting current revenue numbers. Gross profit is up for renewables, but operating income is still showing a loss from operations. Corporate expenses, meaning costs not tied to specific business segments like executive salaries and legal fees, have increased slightly for the quarter, but decreased for the 9-month period. An interesting note here is the increase in auditing fees, hinting at a change in auditors or increased scrutiny of their financial reporting. Looking back at the balance sheet, specifically the liabilities, it appears the company's overall debt structure remains manageable, but the increase in total liabilities from last year warrants watching. They have a significant amount of captive insurance liability, which is basically the company insuring itself for certain risks. This liability has grown, suggesting they are taking on more self-insured risks. Now let's talk about potential financial landmines. The company mentions ongoing legal proceedings, particularly related to Residence Energy in Illinois for alleged consumer fraud. They deny these allegations and are fighting them, but these can often lead to significant costs or settlements down the line if they don't go their way. They also have a substantial claim against them from the Lumo Finland bankruptcy estate related to gains from selling swap instruments. While Genie Energy believes the claims are without merit, these kinds of legal battles can be lengthy and costly, even if they ultimately win. It is a reminder that financial statements don't always capture the full picture of every potential risk. Scroll liquidity and capital resources center. So, how is Genie Energy positioned to handle its finances? The company expects its current cash flow and reserves to be enough to cover its needs for at least the next year. They have a healthy amount of cash. Even with the increased liabilities, their capital expenditures are mostly focused on solar projects, which is in line with their strategic shift in the renewables sector. Scroll 9 months ended the 30th of September 2025 Fine Center, looking at the cash flow statement for the 9 months. Operating activities provided about $30 million, which is down from $57 million last year. This confirms the earlier point about profitability pressures, as less cash is being generated from their day-to-day business. Investing activities used about $10.4 million, mainly for capital expenditures on solar projects. Financing activities used almost $15 million, largely due to dividends paid and stock repurchases. It's good to see they are returning some value to shareholders through dividends and stock buybacks, but it is happening while operational cash generation is softening. Overall assessment tied center. So, what is the big picture here for Genie Energy? On the one hand, their revenues in the electricity segment are growing, and they're pushing forward with renewable energy projects, which is a positive long-term direction. They're also managing their debt levels reasonably well and have a decent amount of cash on hand. However, the core issue is profitability. The rising costs of energy are squeezing their gross margins, leading to lower income from operations and net income. This is a significant challenge in the current market. The legal disputes, while denied, also represent an area of potential financial risk that can develop unexpectedly. Their strategy of shifting in renewables towards larger utility-scale projects could pay off in the long run, but it is impacting short-term revenue and requires careful execution. To sum it up, Genie Energy is navigating a tough energy market. Growth is present, but profitability is under pressure due to rising costs. Their renewable energy expansion offers future promise, but the legal clouds and competitive pressures in the energy sector mean investors should remain cautiously optimistic and keep a close eye on how they manage these rising operational costs. Alright, that is our breakdown of Genie Energy's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord linked in the description. Thanks for watching. See you next time.